You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, March 6th. 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is OECD cuts global growth forecasts again. The Organization for Economic Cooperation and Development cut forecasts again for the global economy for this year and next. It signaled out trade disputes and uncertainty over Brexit as the main reasons for its pessimism. The Paris-based organization now sees world GDP growing 3.3% in 2019 and 3.4% in 2020. That represents cuts of 0.2% for 2019 and 0.1% for 2020 compared to its last set of forecasts in November. High policy uncertainty, ongoing trade tensions, and a further erosion of business and consumer confidence are all contributing to the slowdown, the OECD said in its report. Substantial policy uncertainty remains in Europe, including over Brexit. A disorderly exit would raise the costs for European economies substantially, it said. The second thing to know today is ADP payrolls data is on tap. On the data front, the market's attention will shift to the U.S. labor market with the ADP's report on private payroll growth, which is often seen as the warm-up act for the big Friday government non-farm payrolls report. Economists expect the ADP report due out at 8:15 a.m. Eastern to show that private payroll growth totaled 189,000 in February. A pair of Fed speeches are also on the agenda, with New York Fed President John Williams and Cleveland Fed President Loretta Mester speaking at private events. The Fed also released its Beige Book, a collection of economic anecdotes from each of the central bank's 12 districts that will be out at 2 p.m. Eastern today. The U.S. dollar index was at 96.85 at 5:40 a.m. Eastern, after going as high as 96.95, the previous day's high, its highest level since February 15th. In the bond market, U.S. Treasury prices inched higher, pushing yields slightly lower across the curve, with the benchmark 10-year yield falling to 2.71%. The third thing to know today is EIA's weekly oil supply report is on tap. In commodity markets, the U.S. Energy Information Administration will release its official weekly oil supplies report for the week ended March 1st at 10:30 a.m. Eastern Time. Analysts expect the EIA to report a gain of around 1.2 million barrels in crude inventories. After markets closed Tuesday, the American Petroleum Institute said U.S. crude supplies rose by 3.7 million barrels last week. Crude stocks at the Cushing, Oklahoma delivery hub rose by 1.1 million barrels. U.S. West Texas Intermediate crude futures were down 67 cents, or around 1.2%, at $55.90 a barrel. International Brent crude oil futures were at $65.50 a barrel. That's down 36 cents, or roughly 0.6%. The fourth thing to know today is U.S. futures pointed to a lower open pre-market. U.S. stock futures pointed to a lower open amid renewed concerns about a global economic slowdown. Elsewhere, European stocks inched lower in mid-morning trade as weak results from the troubled auto sector dragged the market down. Earlier, mainland China shares rallied sharply as markets took hope in stimulus measures announced by Beijing on Tuesday. And the fifth thing to know today is the last batch of retail earnings is here. The fourth quarter earnings season has all but wound down, but results are expected from a number of retailers today. Teen fashion chain Abercrombie & Fitch is forecast to earn $1.15 a share on revenue of $1.13 billion, according to analysts polled by Investing.com, when it releases its results in the morning. American Eagle Outfitters reports after the close, with analysts expecting earnings of 42 cents a share. Revenue is forecast to be $1.26 billion. Other notable companies reporting results today include BJ's Wholesale, discount store operator Dollar Tree, and fashion retailer Chico's. Our second story today is from CMEgroup.com. CME Group delivers first ever electronic spot auction of U.S. crude oil export cargo. CME Group, the world's leading and most diverse derivatives marketplace, today announced it completed the first successful spot auction of one crude oil export cargo of U.S. Gulf Coast light sweet crude oil. 17 global energy firms participated in the auction for crude sold by Enterprise Products Partners LP that's available for delivery and export at its Enterprise Houston Ship Channel terminal. The auction was successfully completed at a price of 46 cents a barrel premium to an average of the NYMEX WTI Houston crude oil futures contract. Our third story today is from Investing.com. U.S. trade deficit hits a 10-year high in 2018 on record imports. The U.S. trade deficit surged to a 10-year high in 2018, with the politically sensitive shortfall with China hitting a record peak, despite the Trump administration slapping tariffs on a range of imported goods in an effort to shrink the gap. The Commerce Department said on Wednesday that an 18.8% jump in the trade deficit in December had contributed to the $621 billion shortfall last year. The 2018 deficit was the largest since 2008 and followed a $552.3 billion gap in 2017. The trade deficit has deteriorated despite the White House's protectionist trade policy, which President Donald Trump said is needed to shield U.S. manufacturers from what he says is unfair foreign competition. One more item of business. I want to remind everyone that Market Taker Mentoring will be holding a very special webinar for option traders this Saturday, March 9th at 10 a.m. Central Time. That's 11 a.m. Eastern. The special presentation is titled How Using a Checklist Can Add Up to 20% to Your Trading Profits. This is a very rare presentation, and you're invited. It's complimentary. All you need to do to register is to go to markettaker.com/list. That's market, like stock market, taker, like take something, so 2 T's in a row, markettaker.com/list. And that, ladies and gentlemen, is news you can use for today, Wednesday, March 6th, 2019. Your options news rundown. I'm Dan Passarelli, trade smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.